No, like I wanted to ask you because I've been hearing about it a lot, but just the benefits of a local lender versus a big bank.
Yeah, you run into this a lot, and you and I have talked about it before about getting a solid pre-approval. And I will tell you, and I swear every time we have a discussion, I like just talk to this client, and
Mhm.
honestly, these
You
are all true
actually did,
stories.
yeah.
Yes, these are all true stories. I wish some of the stuff I could make up, but this is all true. So the phone call this morning was from a client, and she was actually a little bit upset because she just closed on her house. So she sold her house,
Okay.
and she has decent income and a decent job, and she has a very large down payment because she just sold her house. First of all, she never thought about getting pre-approved before selling her house, which is, I'm not going to say mistake number one, but maybe you should have done that before you sold your house so you know where you're going to be at. But she went to a very large bank. Um, the bank ran her credit, asked her what her income was and what she had for assets, and pretty much called it a day at that point. They got back to her. They said, you know what, we can't help you. We can't pre-approve you. Your debt to income is too high. She asked them a couple questions about it. They had no answer for her. They pretty much said, I'm sorry, save some more money, make more income, and maybe we can help you in the future. So we had a conversation this morning about this, and we went over the importance of pulling apart the pre-approval. People have debts that are obviously contributing to that debt to income ratio. Let's look at those debts. Let's look at maybe, with this client, she has a very large down payment. Let's look at, hey, why don't we take 30,000 of this down payment and pay off your car loan? Your car payment is $425 a month. That in a mortgage amount is a huge amount of mortgage as opposed to, a $30,000 car payment. Student loans, credit cards, anything that you might have on your credit report, let's look at paying those things off. I call it mixing and matching. Let's mix and match where we're going to put your money. Is it better to put it on a down payment? Is it better to put it to pay down some debts? What do we need to do to make this work for you? And I love doing this stuff. I love running the numbers, and I love working with people to try to figure it.
It's a problem.
It's a problem that you're solving.
Yeah.
Correct. Absolutely. And it's so much fun doing this. And you have this person who is down in the dumps, can't buy a house because some large bank said, your debt to income's too high. And now you're helping them buy a house, and it's such a great feeling. Never mind, this large bank never even asked to look at any of their documentation.
Which is unusual, isn't it?
It is. And my theory behind that is they don't want to spend the time. They're playing the numbers game. They're just getting people in. If one of them works and they go under contract down the road, there's a loan for them. Hopefully that person actually does qualify when the time comes. Their business isn't built on relationships, where mine is. I want to make sure my clients are happy. I want to make sure the agents who refer my business are happy. Where these large banks, the people just walk in the door and they want mortgage information. So they don't care about their relationship with the agent to get future business. But how do you know that this person doesn't truly qualify if you haven't looked at the numbers?
Right.
Take the time. It's a half hour out of your day to help somebody qualify for a mortgage. It's not days and days and days. This person was a W-2 employee. It wasn't somebody who has multiple businesses and a ton of rental properties. Right. It's not a tough one to take the time. And at the end of the day, don't you want to take that time and help that client? And that's what this is about, helping people.
Oh, absolutely.
Yeah.
So you're saying mix and matching. So let's use some numbers here. Let's say she wants to buy a $500,000 house.
Yep.
What's 20% of $500,000?
$100,000.
Okay, let's say she's prepared to put $100,000 down, 20%. So you're essentially saying, because they said the debt to income doesn't work, you're essentially saying if you have the $100,000 to put down and potentially have other debts, we can take part of that money, lower the down payment.
Correct.
Right, and then pay off some debts. That will make the debt to income work.
Right, that's going to bring your debt to income down because now you're taking that, whatever it is, that $450 car payment. And I don't even know if there's a $450 car payment out there. They're at least that much nowadays.
Right.
You're taking that $450, you're getting rid of that. So now you have another $450
for the month
for the mortgage payment. Which is that's a lot. That's probably $70,000.
So
I'm asking to do calculations,
right.
but I'm going to say somewhere in that range. That's a big difference.
It's a big chunk. I was asking because putting more money down can lower your debt to income ratio also.
Correct.
But in this case, eliminating a big monthly debt
Correct.
is more important than,
Right, than the
the
mortgage.
higher down payment.
Right, because if you think about it, take that $40,000 that you're paying off your car at that $450 a month payment. That was a 5-year loan, we'll say. As opposed to that $40,000 on a mortgage, that's over 30 years. So that $40,000 is this much on a payment on your mortgage, where it's this much on a
True.
car payment.
Right. I see
So
what you're saying.
that's, and here's your debt to income limit. You're only using up this much here, where the car payment's using up this much on that debt to income
Yeah,
limit.
the diagram you just drew with your hands is definitely helpful.
Sorry.
No, I don't apologize. I love it.
And sometimes it's hard to understand because people are like,
It is,
but
right.
it's only a car payment, it's only.
Right, because you think it's only
Right.
$450 a month. Like, how
Right.
could that impact when I'm trying to buy a $500,000 house?
It's huge.
They're not understanding that it's that monthly payment that
Correct.
we're looking at.
Correct.
Right.
It has nothing to do with the balance. It's the monthly payment.
Yeah,
Yeah.
that is huge, and it's
Yeah.
good to know. And you make a good point. A local lender cares more. I'm not trying to, insult the bigger banks, but they're not really relying. No, not about relying. They're not. Their primary focus isn't mortgages. Whereas
Correct.
we only focus on mortgages.
That's all we do all day
This
long.
is all we care
Right.
about.
We don't open checking accounts or savings
Right.
accounts.
We're
We
not
don't worry
holding
about
the money.
investment accounts or
Yeah.
anything like that. We are all about helping the client. And a lot of these banks won't even pull your credit. Every time we pull somebody's credit, it costs us money.
Right.
There's a fee for that. And these banks don't want to dish out that fee to pull credit for people. So very often they're just asking the client, well, what are your credit scores? Well, Maria, what's your credit scores? Do you know what your credit scores are?
771. Yeah. I checked
Okay,
the
you
other day.
do. But how many people, if you walk down the street and ask me, what's your credit score? Most people don't know.
Most people don't even know what a credit score
This
is.
is true,
let alone
too.
what their score is.
Yeah.
Right.
So they'll be like, oh, are your credit scores good? Yeah, they're good.
Yeah, they're good.
So they're just going to assume, 750.
Right.
But really, this person is thinking, 680 is good. So, that affects your pre-approval. That
Oh, yeah.
affects what you can get pre-approved for. So
That's a good point. How many times are you actually doing a hard credit pull? Right? People might not even know that they have stuff in collections.
correct.
Because
Happens
they're
all
not.
the time.
They're not pulling their credit.
Happens
you
all
know.
the time.
Yeah.
Yep, especially
does.
medical collections.
Oh yeah.
Because
Especially.
you didn't pay your deductible and you didn't realize it and they didn't bill you for it and then it just goes to collection and that's going to affect your credit scores.
Right.
So,
Well, and that also can impact debt to income.
absolutely.
But that's a topic for another day.
That
right?
is a whole nother
medical
topic.
debt.
Yep.
Or student loans.
Credit scores and what program is best for you and stuff. But absolutely.
Indeed.
Yeah. What's my phrase? Credit scores are the gateway to a mortgage.
Is that your motto?
That's one of my mottos. Right next to you can't have too much cheese. That is one of my most favorite phrases in the world.
Oh my
You can't
god.
have too much cheese. Cheese is awesome.
Yeah, cheese is. If I could marry cheese, I would. I would
Cheese and
marry it.
chocolate.
Yeah. Oh
Yeah.
man, I love me some cheese.
Chocolate covered cheese.
Yeah. Cheese party. Oh, cheese. Anyway,
I just have that for meals sometimes.
yeah, just a whole block of cheese.
Yeah.
It's
Yeah.
called girl dinner.
Yes.
At the
Cheese and
camper, I'll
wine.
just like
Yeah.
cut it up with crackers, sometimes some pepperoni, and I just go down and sit on the dock.
A
and drink.
charcuterie board for dinner
Shark-
is
It's a shark
charcuterie board is killer.
That's it. It's a meal. Right
Top.
there.
Yeah.
Mhm.
Like crackers, meat, cheese, some fruit, chocolate. Oh.
We used to just call it cheese and crackers, but now it's a charcuterie board.
Yeah. It is primarily taking away from a large down payment to pay off debt. There's really not much else.
There
that we
isn't
can
much else.
Mix and match with.
No. It just takes some time. Everybody, has in their mind, I have to put 20% down, I have to put 20% down. And sometimes that's not like, yeah, but I can't qualify you if you feel you have to put 20% down. So we got to back that down to 10% down and you got to pay off some of this debt. Buying a house or not buying a house, there has to be flexibility. And again, it's educating the client. Look, this is what your payment's going to be like if you only put 10% down. But your car payment's gone now.
What a huge relief too.
Right. You don't have the $450 car payment. Yeah, your mortgage is $100 more than you wanted it to be. But you already got rid of your $450 car payment, so you're actually net $350 a month.
That's a really good point. It's putting it into perspective. Yes,
Yeah.
you're paying more for the mortgage than you would have liked, but you eliminated something else. So you're not
Correct.
paying more technically. You're paying
Correct.
less in liabilities.
Correct.
On a
monthly
monthly
basis.
basis,
Yeah.
yeah.
And if you
That's a
want
great
to
point.
even go further on that, in most cases, your mortgage interest is tax deductible. So when you file your taxes at the end of the year, you get a little bit more back. You know, obviously, there's restrictions, and you got to talk to your accountant. And I'm not an accountant, but you know, your car payment is not deductible unless you use it for business purposes. And again, not an accountant, but so it's helping you a little bit more there too.
Wait, are you an accountant?
I'm not an accountant.
Very good.
I don't represent that I am. I didn't stay at a Holiday Inn last night. Not an accountant.
Could have fooled me.
I'm not even sure I slept last night. To be honest with you.
Same. No, that's great. That's great to know.
You know, that this just comes with being in the business for a long time.
And
well-
actually caring,
Correct.
right?
Correct. And that's
Yeah,
fun. You know, people come to me, agents come to me like, oh, you know what, I have this first time home buyer. You know, they're only like 300,000. You know, do you mind working with them? Like, do I mind working with them? Of course, I don't mind working with them. Like,
Of course.
I'll work with any. If you want to buy a house and you want to work with me and make things work, I'm going to want to work with you.
Absolutely.
If you know, have totally done terrible things to your credit and you have no responsibility in them and you could care less and you're not going to, you know, take the advice I give you, then maybe it might be a wasted conversation that we're having. But if you want to work with me and you take my advice and the suggestions that I give you that I've seen work for other clients, let's work together.
Well, I would argue that no conversation is wasted, even if nothing comes out of it. At least, you know, you've gained more experience from
that's
it,
true.
and
Good point.
hopefully they take something. And if not, not. You know, it's
Yep.
nothing lost, nothing
That's
gained.
very
It's
true.
not a big deal.
That's very true.
You know, it is what it is, right?
Yep.
But it perhaps gives you more tools to work with difficult people or something. Who knows? But
We know that this world is full of them nowadays, aren't they?
boy, I tell
But
you.
I always have a smile on my face. I'm always happy to talk to anybody.
Good. That's great.
It's never a waste.
All right, cool.
Nobody's ever a problem. Give me a call. We are here to help.
I wrote mixing and mashing, not matching. I just noticed that.
She's drunk.
Matching. Okay, very good. Cool. Is that it?